Most traders blow their $100 accounts, not because the market is against them, but because their mindset is. If you've ever felt that cycle of excitement on one win and devastation on one loss, you're not alone. That's how the majority stay stuck. But here's the twist. Millionaire traders started the same way, and what separated them wasn't capital, it was psychology. In this video, you'll discover the exact mindset shift that turns a $100 gambler into a disciplined trader, and why your emotions, not your balance, are the real test. Stick around, because the answers here will challenge how you see every trade from now on. Most traders don't fail because of the market. They fail because of the way they see themselves in the market. Think about it, almost every $100 trader begins with the same dream: flip this tiny account into something life-changing. But here's the trap. They treat that $100 like a lottery ticket, not like seed capital. I've watched new traders sit down at their screens and blow through $100 faster than they'd spend it at a casino. They gamble on one oversized position, praying for a miracle. And when the inevitable loss comes, they blame the market, the broker, even bad luck, but look closer. The $100 wasn't the problem, it was the mindset behind it. Legendary traders never saw small capital as an obstacle. Jesse Livermore started with pocket change, Richard Dennis began with a few $100s, and the Turtles were handed tiny accounts to prove that process. Not size creates wealth. What they had in common wasn't money. It was a ruthless respect for probabilities and risk. So here's the paradox. If you can't protect $100, you'll never protect $1,000, $10,000, or $1 million. The market doesn't magically reward you with more discipline when you scale. It exposes who you already are. Picture this, a farmer holding just one seed. He has two choices: eat it now or plant it. One choice kills the future. The other multiplies it beyond imagination. That's what $100 is in trading, a seed. It's not enough to live on, but it's enough to build roots, test the soil, and grow into something extraordinary. Most people never get past this first step because they're chasing the wrong goal. They want fast money. Millionaire traders wanted longevity. They respected the little they had until the market gave them more to manage. And that's the beginning of the millionaire mindset, treating $100 with billionaire seriousness. If you walk into a casino with $100, you already know how the story ends. The lights, the sounds, the glamour, they exist because the house always wins. Not on one spin, not on one hand, but over thousands of plays. Most traders don't realize they step into the market with the exact same mindset as a gambler. They go all in on a setup because it looks perfect. They double down after a loss to make it back. They ride emotions, not statistics. And the market, like the casino, eventually takes it all. Here's the brutal truth. The difference between a $100 loser and a millionaire trader isn't capital, it's identity. Losers think like gamblers. Millionaires think like the casino. Casinos don't care who wins tonight. They care about probabilities, edges, and sample sizes. They know that if they keep their rules and volume high enough, the math will always lean in their favor. Professional traders copy this philosophy. Richard Dennis, the man who taught complete beginners to trade and turned them into millionaires, drilled this point home. Every trade is unique, every outcome uncertain, but the edge over time is everything. One trade doesn't matter. 1 week doesn't matter. 1,000 disciplined trades do. Think about that. If you risk $5 out of your $100 with a strategy that wins 55% of the time, you will experience losing streaks. You might even watch 5 losing trades in a row drain half your account. But if you survive that streak and stick to your system, the probabilities will eventually favor you. That's not gambling, that's math working in your favor. The casino doesn't panic when someone hits the jackpot. And the millionaire trader doesn't panic when they take a loss. Why? Because both know something gamblers never understand. Individual outcomes are irrelevant. The edge is king. So the next time you sit in front of your trading platform, ask yourself, am I playing the role of the gambler or the house? Here's the cruel joke of trading. The market doesn't punish you because your strategy is bad. It punishes you because your emotions are untrained. Take a $100 trader. The first small win makes them euphoric. They think, if I can double it once, I can double it again. Then a single loss hits and suddenly they are devastated. Fear sets in, revenge trading kicks in, and before long the account is gone. But millionaire traders, they play a completely different game. The size of the trade doesn't control their emotions. They could lose $10,000, and remain as calm as if they spilled a cup of coffee. Why? Because they've built the one weapon most traders ignore: detachment. Think of it like a general in battle. A single skirmish lost doesn't decide the war. What matters is the strategy, the supply lines, the long campaign. The general who panics after one defeat will lose everything. The one who stays calm, repositions, and continues executing the plan eventually wins the war. That's how millionaire traders think. They don't need to be right on every trade. They don't cling to outcomes. They care only about executing their edge, again and again, like a surgeon repeating precise movements under pressure. This is where psychology becomes brutal. Because trading isn't about charts, indicators, or even news events. It's a mirror. It reflects back to you every weakness you've buried. Impatience, greed, fear of loss, need for certainty. All of it comes rushing out when real money is on the line. So ask yourself, who are you when you lose? Do you spiral or do you adapt? The great traders, Paul Tudor Jones, George Soros, even Warren Buffett in his long-term way, all mastered detachment. Not because they didn't care about money, but because they cared more about consistency than about the outcome of any single decision. Here's the paradox. When you stop caring about whether you win or lose this trade, that's when you finally start winning in the long run. Emotional detachment isn't apathy. It's mastery. Here's the harsh truth. $100 doesn't turn into $1 million through luck, gambling, or a single perfect trade. It happens through the boring repetition of discipline. Every legendary trader you've ever heard of, whether it's Richard Dennis teaching the turtle traders, Ed Seykota quietly compounding returns, or even modern fund managers, built wealth the same way, by scaling process, not money. Most beginners get trapped in a fantasy. They believe if they just had a bigger account, they'd finally trade better. But here's the reality. If you can't respect $100, you won't respect $100,000. If you blow up small capital, you'll blow up large capital even faster. The zero is always waiting. Think of the mindset shift like compounding interest. If you grow 2% consistently, $100 slowly becomes $102, then $104, then $110. It looks small, almost laughable. But stretch that growth over hundreds of trades, over months and years, and suddenly the numbers multiply in ways most traders never live long enough to see. This is why the millionaire mindset is rare. It demands patience in a world screaming for speed. It demands consistency in an environment built on chaos. It demands the humility to let time do the heavy lifting, while you repeat the same simple process with military precision. Scaling isn't glamorous. It's showing up every day with the same rules, the same risk management, the same calm detachment, whether your account is $100 or $1 million. By the time you manage real wealth, nothing changes. The charts are the same. The candles are the same. The psychology is the same. The only difference is the number of zeros, and the discipline you already built when no one was watching. So here's the final truth. Millionaire traders are not made by markets, they're made by mindsets. If you can master probabilities, detach from outcomes, and scale discipline instead of emotions, you're already rich. The account balance just hasn't caught up yet. If this video sparked a new way of thinking, share it with a fellow trader who still believes capital is the problem. And remember, your edge isn't the money you start with. It's the mindset you choose to build. See you in the next lesson.